Andrew, great having you on the Slice of Finance podcast. How are you today?
No, happy to join, Jared. All is good.
So we missed each other at Money 2020, but we're chatting now, so that's what matters. That was my first Money 2020, so it was pretty cool for me to kind of meet everyone and started doing more in the fintech space. So that was it was eye-opening. It was a really good time. I met a lot of great people, but I'm excited for this conversation here today. So let's dig right in. First off, let's assume there's people listening that maybe haven't heard of Extend. What do you tell them about Extend?
So, as the name suggests, we extend something, right? And the whole idea is we really extend the value that sits behind a credit card that you already have in your pocket, right? The idea being is we bundle, right? Not home and auto like State Farm, but what we go and bundle is actually the concept of payments with spend and expense management. The idea being that your card you already have is a much more powerful tool, right? When essentially you enable it through Extend. A, because we give you the power to instantly distribute cards to vendors, to employees, to contractors. But B, we then also help you to sort of manage to track that spend through capturing receipts, through allowing you to allocate them right to the right expense buckets, so that at the end of the month, you can actually go and account for those in a seamless integration into your ERP, right? So number one, the takeaway is we do focus on commercial, not on consumer. Right. And so we really are focused on small businesses. At the end of the day, SMBs represent close to 50%, right, of the US economy. I think it's like 43% or something along those lines. And really, it's about enabling that segment with capabilities they frankly haven't had access to.
Let's talk about kind of how you led into your role here, right? So you founded this company several years ago, over 8 years ago, right now.
I think I shared with you, right? It was my seventh Money 2020, which sort of gives you a sense of when I got in the game, so to speak. And this was really my opening, was really going to Money 2020 actually in 2016, right? That's when I really first got started with the idea and went to Money 20 with wireframes, right? That's all I had, a deck and some wireframes. And that's when we started really sort of thinking about the concept. I had come out of 12 years at American Express, so I had a pretty good idea of the industry and how it operated. Before that, I'd spent 10 years working alongside SAP, which sort of gave me a sense of, hey, how do big companies think about payments, right? And making different approval flows work through the organization. And so really sort of bundled those two experiences together to sort of say like, okay, that's all well and good in the enterprise segment, but what do you do for the SMBs? How do you keep something really simple from people who have 10 people operations up to 300 people operations? And that's really the segment we've been really focused on, right? And delivering value, partly because we also saw that particular segment actually is, from the bank's perspective, is being somewhat right disturbed, let's say, by the addition of new fintechs like the additions of Ramp and Brex and others in that space. And really, it's about how do you create a defensible ecosystem for the traditional banks. More importantly, how do you create a platform for a cardholder who just doesn't want to change banks? Right? They don't want to open a new account with one of these new players. They have a card. It works really well for them for most of their use cases. But actually then how do you overlay all these other services? So actually now your traditional bank card looks and feels more like a modern platform that you might be getting from the fintech industry.
Let's talk a little bit about the unique value of virtual cards for business payments, because this is obviously something you mentioned, these platforms that are out there. I remember when I started my first business almost 6 years ago now, there were virtual cards and stuff, but it was not as widespread as it definitely is today. So what really lies in the unique value of these virtual cards?
Yeah, so I'd say our single biggest differentiator in the industry was how you access the capability, right? It was all about removing friction from the industry, right? And people forget that we're really at the beginning of the digital journey, right? Mobile phones, Apple, and et cetera. What's 2006 and 7, right? So it's like 14 years. Sorry, what am I talking? I can't even do my math right. So 17 years old. But you realize actually it's still young, right? And same with software. Software's been, for bigger companies, has been on-prem software that you were running on your own servers. And now we talk about just the cloud and e-commerce, and everything's moved there. So you have this view also of payments that have gone from paper checks and they've gone from digital files, right, to now being API driven and event driven. So you have this confluence, right, of technology hitting both software and also payments. And so I think you're suddenly starting to see new things appear. And really what we wanted to do is to say, actually, virtual cards, right? The ability for you to shard your line of credit on your card and the ability for you to hide that number from everybody and anyone, whether it's a vendor, a contractor, or an employee, right, should actually be a feature of every card already in circulation. And so the big difference that we made in the industry was saying, no, you don't need to go and open an account. You don't need to go and be underwritten. You don't need to go through a contracting process to access virtual cards. And by the way, it's not going to take 16 weeks either. It's going to happen in sub 5 minutes. And it's going to happen, right, over the top of the card you have in your pocket. So you remove all that friction, and within 5 minutes, we give people access to some really powerful tools to help them run and manage their business more efficiently.
Now, another thing I wanted to bring up to you today, Andrew, is there's obviously a widespread accounting shortage. So how can technology assist CFOs in helping deal with this widespread shortage?
Yeah, so the way I look at it is, specifically in our business, we're 70 people shop, right? And you look at it and it's like we have one VP of finance. So many of the tools that were made available for these folks, right, relied on the fact you might have an AP person, an AR person, someone to manage your card program, someone to, it's all like, no, there's one VP of finance, right? And he essentially has one person working for him. And they have to do everything, right? From the P&L to the balance sheet, right, to all the forecasting work. And so actually the tools that were there at the time weren't actually helping. And I think that's the big difference here is we're trying to drive efficiencies for businesses that really have one or two people in finance, but we can now make them feel and look as if they had 10 people in finance. Why? Because so much is automated. A lot of it is distributed back to the employees in that you're making it simple to go and capture receipts, to capture invoices. You're making it simple for those transactions to be automatically allocated to the right expense category, to have a department associated with them. If it's a charge that we see with some of our partners and law firms, they need to have a client code associated with it so that they can rebill that client, right? Or it's dealing with someone who has multiple franchises and they need to know which one of the franchises is making this purchase. So all of that is kind of embedded within the actual digital card that you're using. And so you're not having to collect additional data. It's kind of all flowing through seamlessly. And so that's why you're getting efficiencies into the system and truly starting to help. The office of the VP of finance, I'm not going to call him a CFO because many companies that size and scale don't have a CFO, right? It's just that's a large corporate entity, typically with 500 plus employees. And so for us, it's all about how do you provide those same tools really for the smaller scale companies so that they too can benefit from that transparency, efficiency, and value.
And that's the true value too of the startup. You're looking, these bigger companies, they're creating all these they were creating all these tools assuming that people are going to have these big companies, and you're looking at it from a total different lens saying, people want to in many ways be more lean. Like they want that big company feel, but they want to be more lean in doing so. Because especially like a startup, right? They can't afford having 4 people on their finance team, 4, 5, 6 people, right? So I really like that approach. In terms of like what you're seeing, so you said you've been to a few Money 2020s, so I'm sure you've seen a lot at these events. But outside of that, like what's next for the fintech and payments industry?
No, it's interesting. I think you see a lot of cycles, right? In terms of from year to year, you see different things. I think that because we're at this beginning of this journey of the digital transition, right, across payments, across software, I think the next journey is replicating what's happening in consumer, right, which is the embedded concept, right, of payments, right? We know that when you go to Starbucks, it's sort of like you order your coffee and the payment's sort of embedded in there. You take an Uber, it's embedded in there. So on the consumer side, because life is pretty simple, right? You operate over the top of either an Android or an iPhone. The idea is that, okay, it's a simple journey. Now, it's much more complicated when you go into B2B. Why? Because I could be using on one end of the spectrum SAP, on the other end of the spectrum, I could be using QuickBooks or an Excel spreadsheet, right? And then there's different procurement tools and there's different number of employees and different workflow approvals. So I think what's really coming next is the whole concept of embedded payments, but in the B2B segment, right? Which is, I need to be able to go and order something and then the payment happens seamlessly on the back end with all the right approvals, right? With all the tagging of those transactions. So it essentially flows through to the finance department in a seamless way. And I think, that's going to be the really big transition. That's certainly one of the horses I'm betting on and betting on heavily. And we just signed a partnership with SAP Concur Invoice to really be right? That middleware layer that sits between their software, right? And the financial service industry that today issues credit cards in completely different ways from one to the next, which makes it not impossible then for the software companies to think about embedding payments because they're not in the business of maintaining a spaghetti junction of card issuance, right? So they need a player to come in there and standardize and normalize it all and really offer a managed service. And I think that's just the tip of where we're going. I think you're going to see much more of that across all payment rails, not just digital cards. It's all in real-time payments and other modalities too. And again, all of this is being facilitated by the cloud, by APIs, right? By also, frankly, I think with PSD2, what we've seen is an opening up of the ecosystem, right? For too long, a lot of these platforms are still sort of greenfields and mainframes. You go into the sort of traditional world and they've moved off those mainframes a long time ago. I think so now we're starting to see wrappers coming around, right? These old-fashioned ledgers and really facilitating a real acceleration, some degree a leap, right, into this 21st century.
Give me a common example of what you think the most common application for embeddable finance will be. Like you were mentioning, like for certain like approval workflows, right? Like, can you give me another example of what you think will become eventually the norm?
I think if you're running a procurement platform in a bigger company like a Coupa or an Ariba, right, or essentially you are operating in QuickBooks on the small end of the scale, you should never have to leave that cockpit, right? That's the software you've chosen as a business. It's actually where you do everything. My wife's the CFO, and I always say like, "Hey, do you go into this other application?" Like, why would I go there? I see 8% of my transactions or 3%. I look at my ledgers really through the lens of my ERP. So I think for me, the big thing is you're not going to have to leave that cockpit. That company has gone and curated an experience for its employees. And essentially, the payments piece is an integral part of the whole process. So why are you jumping from one application to the next application? And so I think you're going to see services embedded more seamlessly into bank applications. Because I think even today in B2B, you'll find many clients are like, well, why do I have 7 logins to do different things with my bank? And it's largely because they're all separate platforms and products in the background. So there's a lot of work abstracting all that away. And then I think then it's about bringing it to life inside, right, of the tools that these people use literally on a daily basis. And in many cases, right, on an hourly basis. And I think that's where we start getting true efficiency and we start to get, right, the real benefits happening. For too long, I think we've operated in a world where you're just having to jump in and out of different experiences. It just creates ultimately, I think, frustration across the board.
When you were at, I want to bring this up too. When you were at Money 2020, you had a lot of meetings. What was kind of the common theme that kept coming up in these meetings? Because I know it kind of changes every year. Was it still to that embeddable finance, like, or I hate to say this, but how often did the conversation involve AI? Because it seems like that was a very common thing that was, continued to be brought up in my conversations when I was at the event. Not as bad as I thought, though. Not as bad as I thought it would be. That's the positive.
So 100% agree with you. I thought we were going to see everywhere plastered AI, AI, AI. I didn't actually. In prior years, you had big years when you had sort of the neo processors, right? They were all over the place, right? These new card issuing platforms, because everyone was going to issue direct, right, as a corporate. And you've had different trends go through. Crypto was a really big thing. And, the whole real-time payments all a really big thing that's coming back. But the reality is they almost took over Money 2020, I feel, over the last 2-3 years. I didn't see the same focus this year on one particular theme. I thought it would be AI, but it really wasn't. I think for me, the biggest theme was that I was seeing consistently across, right, the strategy I talked to was the idea that we needed to move away from these really clunky processes to remove friction for end users, right, and friction on integration. So I really feel that's the big takeaway for me was, and for the first time, we were talking to bank managers I've spoken to for at least 6-7 years. And suddenly the dawning for them of realizing that actually if I could activate virtual cards and expense management from a physical piece of plastic in circulation, I can go take this to my smallest customer segment to which I've never touched because it took too many resources. And so suddenly we're sort of seeing people saying, removing friction. And I heard a lot from different banks and issuers, how they themselves are trying to simplify everything into one centralized banking application. So again, that was kind of the number one focus. I love it. Would you be able to offer essentially wireframes, right? Or an embedded version of this so that we can actually use this inside our own core banking applications, right? And that was two of the five biggest issuers suddenly on a mission, right, to really offer that simplified experience. And I think, again, this is where fintechs in the end drive good habits into sort of the larger incumbents, because they start to realize that life could be different, right, and materially different if they brought these whole experiences to life within a unified experience.
Last question for you, Andrew, before we wrap up here. What's next for Extend that you can share with us here today?
Look, we've been on quite a journey. When I think about our early days in 2017, and we got first access to Silicon Valley Bank, right, to be able to issue our first virtual credit card, and off we went to buy a cup of coffee, and that was super exciting, right? And then eventually we started asking questions of their underlying, processor and network, which was really, MasterCard helping them on the virtual card issuance. And MasterCard was like, why don't you just come directly to us? Right? It's a one size across all our different issuing partners. And I think for us, it's what's taken time is to sort of build those relationships, right? Banks don't move fast. And for us, this next year is truly a year of realization, right? In terms of we will have a lot of news coming out over the course of really the next 2-3 months, where suddenly you're going to go and see that we will have reach over about 65% of commercially issued credit cards. In other words, those credit cards across those bank partners, right, will represent, right, about 65% of volume and payments that happen in the ecosystem today. So that's because we're bringing on board some really big names. And that's really part of our journey, is to say, okay, now we've sort of proven out this model, is like, how do we then replicate it? And really what's great to see is you'll see 4 new big bank partners coming online, right, over the course of really the next 2-3 months. And that's exciting because it sort of validates, right, what we've been able to do with one of our really big partners, American Express, and say, okay, how do we then grow this now across the ecosystem and really show the value which we always felt was there, that ultimately will lead us into this embedded world, because essentially there's nothing like having a standard for things actually then taking shape and taking true and getting real traction. So that's really the pivotal year for us as a business, is sort of getting to that scale finally that has been, hard won over the course of many conversations, many of which at Money 20 and beyond. But it's that's the journey, is to really sort of rubber stamp that standard and really become that industry player.
I love it. Andrew, thank you so much for joining us here today. Looking forward to future conversations. Maybe we can get you on a panel. We can dig into some things even deeper. But I really appreciate you being a guest here today.
No, thanks for having us on this podcast. Always enjoy it. And so great to meet you.